Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k.
Fulfillment is an art.
Tony, fulfillment's an art, huh?
The other person next to you. You're not going to learn that from anybody else.
I listen to 99% of what this guy says, George.
Is the ultimate failure.
I love Tony
And I
Robbins.
get those phone calls all the time for the multi-billionaire entrepreneur.
They all want to be fulfilled. When you're broke, you don't care about fulfillment. When you're broke, you care about money and success. Then when you're wealthy and you have success, you care about fulfillment. That's the key point I think that he's missed out on here.
Meaning in their life.
When you're just starting out, you're like, fuck the sense of meaning. Screw the fulfillment. I got to get on my path. I got to have wins. I got to have success. I got to make the money, right? But fast forward a couple of years, you got some dough. You've had your wins. You're crushing. It's like, oh, I need fulfillment. Let's just call it what it is. Fulfillment's a luxury that the wealthy and successful search for. Having been on the starving end of the stick, I can say to you that when I was young and starting out, I really didn't care that much about fulfillment. I mean, the fulfillment I was looking for was success. I needed to have wins, I needed to be on the path, and I needed to know that I was doing the right thing and getting to where I wanted to go financially. And you get to a certain age, a certain point, a certain net worth where fulfillment's important. So for those of you just starting out, I don't know, Tony. I don't know that the younger people should be listening to the preach about fulfillment so much right now. I mean, keep it in your file cabinets and, have it there to access it. But otherwise, I think you got to hustle, get off your ass. Look, if you get fulfilled, great. But if you make a bunch of money, then you'll be able to sit back and worry about fulfillment later.
Next reaction?
Yeah.
All right, here we go.
Oh, the melons. George, I love this. I love that you put this up. Yeah. This is a price war. It's a race to the bottom with these guys. Look, he's going to there he goes. He bought them all, and now they're going to be $60, right? And that other guy's thinking, man, I shouldn't have sold them to you. Look, it embodies exactly what capitalism is about and a free market society is about. I love a free market society, George. I think it's the most streamlined, the most efficient, the best way to operate a society is a free market society. Let the market accept you, let the market reject you. If you're priced too high, the market's going to slap you in the face. If your product is too low quality versus the value of the price, it's going to smack you in the face. You got to let all that play out. That's what's going to create the competition that's necessary. We're going to self-correct, we're going to push forward, we're going to adapt, evolve, change, and meet the demands of the market. The market's always requiring that we pivot and change and meet new demands. So the fact that you put this up here, I love. I talk about free market issues probably every day in my life. Yeah. I'm so for it. And this is such a funny little anecdotal video about it, but I think it's really pure and really simple and how it communicates what these guys are going through. He's like, look, I'm not going to race you to the bottom. I'm just going to buy you out and then I'll set the prices. Yeah. It's great. Bravo for putting that in front of me. Thank you.
Yeah, absolutely. The melon monopoly. And then our last reaction is a tweet. Michael Elbaum says, the cash out refinance is the most powerful tool in real estate investing.
Amen.
Agree or disagree?
Oh, come on.
Yeah.
What do you know what I'm going to say.
I do. Yeah, it sounds like you're going to agree.
Because you posted something today where you were asking me about buying and selling or flipping versus buying and refinancing and owning the asset. I'm going to vote every single time, George. I regret everything that I've ever sold. It hasn't been much, but the things that I've sold in my life, real estate that I've sold, I regret every sale. I wish I still had those properties and those buildings. It's such a struggle, it's such a fight and a battle. It's part of the act of getting bloodied up and beaten up every day to go out and find these deals, to actually win a contract, to close on them, to not have the lawyers and everybody else screw it up, right? The battles at the closing table. And then you actually purchase the thing. Now you got to show up and get to work. You actually got to manage the asset, you got to improve the building, you got to deal with your tenants, fix the stuff, add new value, and improve the value of the property, adding amenities, renovations, all that. And then you're going to go sell it and pay taxes. Never ever made sense to me. So for me, I am a buy and hold guy. I am a buy and hold and refinance guy. I'm always in the debt markets. I'm always searching for the competitive debt products in my marketplace and in my asset class. I know all the lenders. I know all the products that are out there for me. Every month I've got, at least 1 or 2 financings, if not more. This month I have 6. I'm very attuned to what's happening in our world in terms of debt, interest rates, indexes, spreads, lending parameters, loan to value offerings, debt service coverage ratios, all the things that the banks are looking for, I'm very in tune with. And the reason I'm in tune with it, George, is because I don't want to sell. I want to hold my assets. I want to refinance them. I want to hold them forever. And I'm going to pay down debt over the long term. I'm going to enjoy cash flow. I'm going to enjoy value appreciation. I'm going to enjoy lots of tax benefits. This is the whole thing. It all goes away when I sell. When I sell, I don't have any of that stuff. I love cash flow. I love future upside. I love tax benefits and depreciation. I love amortization, paying down my mortgage debt every month as I collect rents. The second I sell, I got none of that. So I'm holding these things, I'm refinancing them, I'm in the debt markets all the time looking for competitive loan products that are going to be great for me, and I'm going to refinance out my old loans with new loans, and I'm in it for the long run. If I do this the right way, my kids are going to be in it for the long run. They'll just step into my shoes and they'll continue the process, but this is how it's done, and I don't want to deviate from that. I'm not a seller, man, so thanks for asking me that.
Yeah, hell yeah. All right. Want to head over to the table?
Let's go to the table.
Sounds great.
Thanks, George. George. Blue, pink, and yellow. Do you have a line of gourmet mustards that you're working on the side, or?
Oh, I wish. I fucking love mustard.
Because you look like perhaps one of those guys that has a little internet business where it comes up on my feed with some like trendy name and gourmet mustards.
Did you know mustard is contributing to industrialization in the developing world?
Yeah, I don't know what it's contributing to.
You can fight against it by buying my gourmet mustard.
It's definitely contributing to the fact that you're wearing 4 different colors right now. Big, bold, solid colors.
That's true. Yeah,
with your man bun.
It is funny. I love my primary colors.
Can you just put a shot of yourself up there today so that everyone can see what I've got?
Sure.
And maybe rotate and get the profile with the man bun sticking out?
Absolutely. I'll do that in the front of the green screen.
Good
before
Lord.
We leave. Yeah, I can do that. Hi, I'm George. Do you know that mustard is contributing to the industrialization of our modern world? Well, you can fight against it by buying our mustard, George Poupon. And you can trust me because I've got a man bun. I'm also wearing 3 different colors, yellow, blue, and salmon. Salmon isn't just the color of my pants, it's also a color of a fish that tastes delicious with George Poupon. If you want to learn more about George Poupon, go to www.ge. Do you want to get started?
Whatever gets me out of this room with you in those 3 colors quickly, I will want to do. So let's get started.
Sounds great. So the last time we met, it was 2021. And in 2021, 63% of home buyers made an offer without seeing the home first.
Oh, man.
I was just wondering, with limited supply, have you had to be more aggressive yourself, like in making deals and things like that?
Well, I'm not buying homes.
No, I know you are, but yeah.
I try to buy real estate, and so what you're describing in the home market is definitely a feature in the commercial real estate market. There's nothing available for sale that's any good. So if anything ever does become available, you're bidding against the planet, the entire planet. And you have to be fast, aggressive. You have to be high in your offer, no contingencies. Same thing like buying a house. But what we are seeing now is that frenzy that you're referring to in 2021, where people were buying sight unseen off of internet listings, just like, I'll take it from like Zillow or whatever. That's stopped. That's not happening anymore. They used to have no need for an open house. They just put it up on the internet and just the offers would come in and people would buy sight unseen. Now it's getting back to a normal market where everything's a little bit more balanced between buyer and seller. 6 months ago, 8 months ago, it was bananas where the sellers were just like asking the brokers, what should we list it for? The brokers would already say a high number, and then the sellers would say, put it up for 15% more than that, and let's see what we get. And then it would sell for 5% more than that.
So crazy.
So that's over with. I think we're back to a more balanced situation between buyers and sellers. Prices are still high. There's still very little inventory. Real estate brokers everywhere have nothing to list. Bad time to be a real estate broker. Most people would say, well, isn't it a good time to be a broker? Because you know you're going to sell whatever you have and you're going to sell it for a high price. So won't you make more commission? As a broker, you want a lot of listings. Yeah. You want to close and sell a lot of listings. You're not getting a lot of listings right now. Right now, you're scratching and clawing for a few listings. Right now, you're probably selling 20 to 25 to 35% of your transaction volume of what you were doing pre-pandemic if you're a real estate broker. So the brokers are hanging on by thin ice. There's going to be a reshuffling of the deck in the brokerage industry. We'll see who emerges. The best ones in each market get all the business. So in every market, it's the same thing, George. 10% of the brokers sell 90% of the real estate listings. And the other 90% of the brokers, they're like part-timers, they're like second jobbers, they're housewives just getting into it. They're guys that sort of left some other industry and they wanted to get into real estate brokerage, but 90% of the real estate in every market sold by 10% of the brokers. It's an incredible phenomenon, happens everywhere. Those guys, they're doing okay because they get those listings and they're closing deals. The rest of the people out there, the flotsam and jetsam of the brokerage community, they're flapping in the breeze. But I'll tell you what, the commercial space is really, really similar. There's no apartment buildings for sale anywhere in my asset class, in my locations. Yeah. Everybody's holding on to them. There's nothing for sale. Sometimes I'll see ghost listings and pocket listings come across my email string or my texts, and I'll pick up my phone and I'll look at it and I'll say, hey, Peter, check out this building. It's $340,000 per unit asking price. I mean, George, we're buying, up until the pandemic, we're buying buildings for $125,000 to $170,000 a unit for vintage garden-style walk-up buildings. New construction's different, but for vintage garden-style walk-ups, about $125,000 to $170,000 a unit. Now all of a sudden they're $340,000 a unit. Nothing's trading. Nothing's getting recorded at those prices. So it's a bit of a stalemate. There's nothing trading. So, look, if I could find some things, I'd be very aggressive and I'd bid very aggressively on it. I'm looking for product type in my marketplace where the rents are under market, where there's opportunities to add amenities and services. And typically these old garden-style apartment buildings, these walk-up style buildings, they never really had any amenities at all. And actually they have lots of deferred maintenance and lots of vintage features and lots of outdated stuff that we have to work really hard to change and spend money on to change. So I'm looking for those. But to pay an exorbitant, unrealistic price, in this case $340,000 a unit for something which pre-pandemic traded for $150,000 a unit, for example, it just makes no sense. Anybody who's buying, and I don't think there is in my areas, but anybody who is anywhere else that's buying at these incredibly fluffed out, pumped up prices, in this case, $340,000 a unit. Man, good luck and be careful, because when you lose that building, when your mortgage note becomes due, Uncle Peter's going to be there to buy it. You're not going to want to hold that thing. You're not going to make any money, man. After expenses, not going to make any money.
No, I hear that. There were some analysts from Florida Atlantic University and Florida International University that recently came out with a...
Define analysts. Is this like a class of kids, or was this like teachers, or is this like a grad school project?
I believe it's grad school, but I don't know. I'd have to look.
Can we not refer to them as analysts?
Sure. Yeah, we can refer to them however you want. But they came out with, I guess, a study that they were doing.
What'd they say?
That there were 8 major U.S. markets where renting is better for building wealth than home ownership.
Just 8?
Just 8. Well, there was the 8
right now. They're saying
that's what they were saying. And so the 8 that listed, they said Dallas, Denver, Houston, Kansas City, and Seattle were definite. And then the minor ones were Miami, Pittsburgh, and Portland, Oregon.
I'll tell you what.
Yeah.
I'm not sure about the analysis that they performed or the data that they collected. Here's what we know right now. The price of homes everywhere is really expensive. That feature, singularly that feature, is preventing a lot of people from getting into home ownership right now. So there's more and more people that are remaining in the rental markets than ever before. In addition to that, rents have gone up a lot everywhere, every market, anywhere from 7% to, in some cases, 30%. If you look at Nashville and if you look at Dallas, and if you look at Dallas is the single biggest rental market we have in the country. And so there's a lot of rental product down there. There's a lot of rental demand down there. And even with it being such a big rental market with all that product, rents have still gone up 20-something% in Dallas over the past year. So it's incredible what we're seeing, not only with home prices, but with rents. And it's a factor of there being very little inventory in the to purchase markets. So everywhere you look, if there's anything good, it gets listed and it sells within a day or two or three. And the crappy stuff that's got issues that no one wants, that's just grossly overpriced to a exorbitant amount, is just going to sit there and linger. And then in the rental markets everywhere, there's lots of new product coming online. I mean, talking about Dallas again, and all throughout Texas, there's, I think, 20 or 30,000 new doors coming online this year. Even when those come online, the Texas market's still going to be underserved. And we're talking Austin, Dallas, Houston, everywhere. So there's a lot of demand. There's not a lot of supply. George, we've said it 157,000 times before. The only way to stabilize housing unaffordability is to keep introducing more supply into the marketplace. So thank God places like Texas have so much shovel in the ground and so much new product coming out that it's going to attempt to try and meet the demand, but you have to build new supply. Create new supply, enough of it, quickly enough, and you will balance the supply-demand imbalance, and you'll be able to have more housing affordability than unaffordability. Right now, we have housing unaffordability. So this Florida Atlantic study that you're referring to, I mean, they're talking about 8 towns where it's better to rent than own. I can think of like 800 towns where it's better to rent than own. And you're talking about Dallas. I mean, have you seen the prices of homes in Dallas the past year? Through the friggin' roof. Memphis. Have you seen the prices of homes in Memphis the past year? Through the roof. Seattle was expensive always, but you can't even touch it now. Seattle's part of that West Coast blue line where they just continually try to regulate their way out of it rather than introduce new supply. It's a problem in Seattle. Texas is trying to get a hold on it. A lot of the Southeast and Sunbelt states are doing a good job at introducing new supply, and there's a lot of building going on down there. But I tell you what, you got to build. You can't regulate your way out of a housing problem. You got to build and create new supply. So Florida Atlantic, I want to see the details on the study that you did, because you're only coming up with 8 towns where it's better to rent than own. Man, I think it's like the whole country everywhere. It's better to rent than own right now. And I think it's going to be that way for the foreseeable future. I'm not talking about a quarter or two or a year or two. I think we're talking about a decade or 2 or 4 or 5. It's going to be way more affordable and flexible and preferable to rent than to own. That's not what I do, George. I own my homes, but I'm 53 years old, and I'm not part of the new generation of teens turning into 20-somethings and 20-somethings turning into 30-somethings that are coming into the workforce or have been in the workforce for a minute and are seeking housing somewhere. The younger people in that age group that I just mentioned are going to have a tough time being able to purchase a home. They're not going to want to. They want affordability, they want flexibility, they want ease, they want access to their money. They don't want it locked up or tied up into a house where they have to live in and they have to pay mortgages and taxes and insurance and take care of landscaping. Home ownership is none of those things I just mentioned to this younger group of people. So they're going to continue to seek flexibility, ease, and affordability with renting. Renting is how you win for so many people. For a really big portion of the population, renting is how you win. You're going to earn whatever money you earn at your job, and sure, you're paying rent. There's a big argument out there saying, well, why should I pay rent when I can own and pay myself? And it's not such a simple argument like that. When you pay rent, and that's all you pay. When you own a house, you got to pay your mortgage, your taxes, your insurance, the repairs and maintenance, the upkeep. If you want to move, we just had an employee move to Mexico to go be with her boyfriend. She got a remote job. I was heartbroken. Wow. She left us. Yeah. But if you own a home, you're not doing that because you own a home. You're going to not make life decisions because you own a home. You're not going to want to move to Mexico with your family or move somewhere else if you own a home. Because when you move, you have to rent something, you have to list your house, you have to hope it sells for the price that you need or want, you have to pay fees and expenses and closing costs. Home ownership is great if you can afford it. Home ownership is great if all the other pieces of the puzzle in your life line up to allow your home ownership decision to be a good one for you. But if you're someone who's mobile, who's traveling back and forth, if you've got one of these remote jobs, if you're an engineer, tech, programming, something like that, where you can choose to live anywhere, home ownership is most likely not going to be right for you because you're going to want the mobility that comes along with this lifestyle and this job and this career that you have, which is a really big part of our world now where it wasn't, even 5-10 years ago. So jobs are mobile, our society is mobile, housing's really expensive, and the housing stock in our country is really old and decaying, and it's expensive to keep it up and fix it and repair it. Look, I already have my roots planted. I'm not going anywhere. I got my spots. I'm in my spots. I own my homes. And I'm not talking about me. But George, if you're in college now, if you're 18, just out of high school, and you want to get started in life, don't be in a rush to buy a home. Be in a rush to invest. Be in a rush to make money. Some people say, oh, well, home ownership gives you the $500,000 exemption or $250,000 exemption if you're single. You could buy a home and get the appreciation and not pay taxes on it. Yeah, you can. If that happens to you, if you're one of the lucky ones where that happens, if you buy right, if you live in it for the amount of time that you need to live in it and make the repairs and take care of it, and you can sell it and make money, God bless. But that doesn't happen all the time. People think that that's automatic, that, hey, I buy a home, it goes up in price, I sell it, I make money. We saw in 2008, 9, 10, and 11, that doesn't happen all the time. And even we're seeing that now. You know what, George? The people that are buying homes today at these crazy prices that we're talking about here on this podcast today, are they going to make money if they hold their home for 5 years? And right, yeah. I don't know. Yeah. I don't know if they're going to make money. I see people that left the city centers and moved out to Kapatapank suburbs somewhere and bought all those homes up and pushed the prices up in those areas. They're now moving back into the cities now. The city markets are on fire again where they weren't a year ago. And they're on fire because the people said, well, screw this. I don't like living an hour or two out of the city. I want to be back in the city. So there's that going on. And there's all this housing product that's just sitting there in the suburbs far away from the city centers. That stuff's going to suffer in price. So, it's not automatic that you buy a home and make money on it. So this exemption for $250,000, $500,000, look, if it happens, good for you. George, you can't expect that the sale of an asset can happen at a certain point in time in the future under certain economic conditions with a certain price point, with a certain buyer profile, that you're just going to be like, yeah, I'll sell my house and make money. You can't rely on that. You can rely on owning businesses and cash flowing assets that produce cash flow, and you can manage that and you can influence that and you can have a say in whether it's throwing off cash flow or not throwing off cash flow, or if you're going to improve the cash flow, if you're going to add amenities and services, add value, that you can have some sort of control over. But if you just buy something for one price and hope to sell it for another and make money, it's not guaranteed. It never is. So for those reasons, George, I'm not sure that home ownership is right for everybody. And I'm pretty sure that home ownership is downward trending, especially for the younger people that are coming into the commerce marketplace now. And I think people are going to prefer renting. They're going to prefer the ease and flexibility. They're not going to want to put $50,000, $100,000, $250,000, $400,000 down on a home. In the Northeast, that's how much you got to put down on these houses in the Northeast, in the West Coast, these expensive areas. And you got to tie up all your money there. And, look, if you're going to stay there for 30 years and get a 30-year mortgage and live it out like our parents did, because that's what they used to do in the 60s and 70s and 80s, they worked close to where they lived and they commuted to where they worked and they paid down a mortgage. And, man, we don't do that anymore, right? Do you? I mean, no one does that. And so I think renting is really the way you win. There's a lot of great rental product that's coming online. There's build-to-rent projects that are popping up everywhere. They're actually building homes for the purpose of renting them. They're building townhome communities for the purpose of renting them. I mean, this is a new thing that we have never really seen before. Sure, we have apartment buildings that are rental buildings. We have apartment communities that are rental communities, but we never really saw large pieces of land get developed into townhome for rent communities. And this is a really fascinating thing we're seeing right now. And the reason we're seeing it, I think, is because it's better to rent than to own for most of society. And for the foreseeable future, it's going to be better to rent than to own.
Yeah, I mean, the Wall Street Journal is talking about how it's the golden age of apartment building owners coming up. And, it sounds like you're in agreement with that concept. Yeah, but what do you think about that? Does that feel realistic to you?
Usually we see a cyclical nature to markets and how they behave. And a lot of people are saying, oh, well, what goes up must come down. And, oh, apartment buildings are so expensive right now. They're going to have to crash soon. Here's why I don't see that in today's market conditions. Number one, as values have gone up, rents have gone up. We just talked about how rents are up anywhere from 7 to 35%, depending on what market you're looking at in our country. I mean, there's a lot of double-digit market increases in rents. And so when you have rent increases, the values of the buildings go up. You don't just have phantom increases in value with no corresponding increases in income. If you have that, you might have a correction. But here we've got values increasing, not for no reason, but because rents are increasing.
Right.
So the value of income-producing properties is directly correlated to the rents that you're able to get at those properties. So as rents go up, values go up. Values are not going up for no reason at all. They're going up really because rents are going up. So I don't see that a correction is going to come because the rents are there to support the values. The other thing that I'm seeing is people are staying put. People that would otherwise leave an apartment rental situation in favor of going out and buying something are having a really tough time doing that. Prices are very high. Interest rates are starting to creep up. Lending parameters are starting to get more conservative. So what that's doing is it's keeping more people who are would-be buyers in their rental situations longer. So there's going to be less vacancies. There's going to be less available new supply, less turnover in the rental marketplace. So I think rents are going to continue to go up. And on top of all of that, the Fed is playing with policy. They have to figure out what to do to cool off markets everywhere. You see that they're raising interest rates. They're not going to raise interest rates so dramatically that it cools off markets abruptly and succinctly, because that'll be a problem. It'll crush the housing market. It'll crush our country's economy overnight. You're going to see them raise interest rates gradually. We now expect 1/4 point per quarter for the next year. That's 100 basis points. That's 1 percentage point. So we're not talking about 2 or 3 or 5 percentage points. We're talking about 1 percentage point. And then they're going to reassess because they know anything more than that or anything faster than that is going to decimate our economic society. So they got to tread lightly and go slowly. As long as the relationship of interest rate increases to rental increases stays decently in proportion, values of properties are going to remain really stable in the apartment building marketplace. So for those reasons, George, I think that we're not going to see a cyclical downturn or a sharp correction with apartment buildings. For those knuckleheads out there that over-levered, and I don't think there's many because we fixed a lot of that stuff from 2008. You know, the over-leveraged guys may find that they have a problem. The poor, subpar operators may find that they have a problem competing because they just run shitty buildings and offer a shitty product into the marketplace, so they're not going to get high rents. By and large, apartment buildings, the cat's out of the bag. It's no secret anymore. It's the asset class. It's where you want to be. You want to own those. You want to be invested in those. And there's so much demand seeking so little supply that values are going to stay high for a while, the foreseeable future, not just a while.
This has been on my mind for actually a few months.
Oh my gosh, why do you wait so long to bring these things up?
Well, I was waiting to see other reports of it and kind of different commentaries on it. So this is what was on my mind, is that institutional investors have been purchasing homes, then turning around and renting those to...
We've been seeing that.
Yeah, it's been an increase in the last year or so, 2 years really. Do you see this? I feel like there's two ways that people have been analyzing this. They've either said it's a more affordable rental supply to find its way into the market, or wait for that to happen, or is it simply an impediment to smaller investors who are looking to get into the game?
George, do you think that institutional buyers who are buying portfolios of single-family homes across our country are looking to introduce affordable rental supply into the market?
I don't think that. No.
They're paying such high prices for these homes, and they're so starved for yield. They don't have any other place to put these huge tranches of money. I mean, billions and billions of dollars they've got to get out of their bank accounts and deployed into commerce. So they're buying these packages of single-family homes that are located all over the place. Do you think that for a second and a half that they are interested in providing an affordable renting solution in a market where we just said that there's supply constraints and rents are going through the roof? No.
Yeah, I'm going to go with no.
Yeah, they're not, and they're going to charge a very high rent for their single-family home that they're going to put on the market to rent. It's going to make it even more difficult for people to buy homes because all of those homes that would be on the market for sale are now on the market for rent. So there's even less inventory on the market for people to buy. And it's going to continue to put upward pressure on home prices, single-family home prices. But it's also going to give new rental comp data points in the marketplace. Look, housing's expensive right now. I can't say it enough. Don't regulate your way out of it. Don't expect that someone's going to pass a law and make your life any better or make your rent or housing purchase any less. The only way to control housing affordability or unaffordability is to build, introduce new supply. That's where we need to spend our time and efforts in our discussions. And our policymakers need to be looking at solutions that promote introducing new supply.
So this is what I'm a little curious about, is that I know this has been something we've talked a lot about in terms of introducing supply and that being the way out of this. But these institutions aren't going away. That capital isn't going away.
Yep.
As supply increases, isn't it possible that this is just a continued trend, that institutions just decide, okay, well, there's more supply, so for me, and I'm just going to purchase it and then make it into more rental units?
Perhaps. That's what free markets do.
Right. Yeah.
And if we see that the price of housing and the cost of housing is inflating so much, wages are going to have to move commensurate. There's going to have to be other movements in the market. People are going to have to adjust. You're going to have to live where you can afford. That's the first thing. I think a lot of people are overextended in housing commitments that they shouldn't be. Same with cars, same with everything.
I think in particular, the thing that stands out is living in areas where it's not affordable to live anymore. I mean, like that people will move and that, other markets will form in other areas. And I feel like that's seems like a
This is what's going to drive us to live on the planets in outer space one day.
Yeah. I mean, that's true. I feel like this is going to shift where markets, activate
Yep.
and, center around. That makes sense. Yeah. Adjustable rate mortgage.
Adjustable rate mortgage.
We did in the past. We used to do a lot of kind of like terms and things like that. We haven't done that in a while. So I was curious,
Okay.
What's an adjustable rate mortgage? What should people understand about it?
Adjustable rate mortgages, ARMs. They are not fixed rate, they are adjustable rates. So an adjustable rate mortgage is one where the interest rate is pegged to an index, and the index changes every day or every month, and so does your interest rate that you pay on your mortgage. So if you pay 3% now, you might pay 2.9% on your next mortgage payment. You might pay 2.5% after that. You might pay 3.2% after that. It moves, it adjusts. Fixed rate mortgages are set in stone. You sign a mortgage note. You have a fixed rate for the entire term of that note, and that's what you pay month in, month out. Every month you make a mortgage payment based on a fixed interest rate. Adjustable rates move. So people get into adjustable rate mortgages typically because they start off a little lower than the fixed rate counterpart, and it gives the borrower the sense of, oh, I've got a less expensive payment. But the trick is with adjustable rate mortgages is that you don't want them to keep adjusting upwards. So right now we're in a rising rate environment, and people that have adjustable rate mortgages are experiencing increases in their rates because the rates are rising, their mortgage prices are rising, and their payments are increasing every month. And you don't want to get caught where you're making a payment of, say, $2,000 a month, and then soon you're making a payment of $3,400 a month, which is what the deal is with adjustable rate mortgages. So be careful. But you can have adjustable rates that are fixed for certain periods. They can be fixed for 1 or 3 or 7 or 10 years, and then they adjust after that. They price differently. The shorter the term, you'll get a lower rate, and then it adjusts after the fixed period is up. You can get a fully adjustable loan where it just adjusts every month from day one. You can get a fixed rate, a hybrid, where it starts off fixed and then adjusts after that. Make sure you're with a good bank that you've got a good relationship with, or a lender who can get you access to a lot of different products out there. But there's a lot of different products. Just be careful. We're in a rising rate environment. A lot of people get caught with their pants down in a rising rate environment with adjustable rate mortgages.
100%. I love it. Rather be rich than right.
Oh,
That's a classic.
Are you quoting me?
I am quoting you.
So I learned that. Well, why do you bring it up?
That was something we talked about a long time ago, and I wanted to revisit it.
I love talking about this. So I'd rather be rich than right is something. I had a business relationship, a short-lived one, thankfully. When I was a kid, I was in multi-unit retail. I had this company. We had like 24 stores, and we had a potential investor. And this guy was such a jerk. I mean, he was an obnoxious, douchey, jerky, rich, wealthy. He was arrogant. It was awful. Just like I didn't resonate with any of that. And he just would say things all the time, and it would make the hair stand up on my arms. He skeeved the shit out of me. There's one thing he said that I'll never forget. He said, "Peter, I'd rather be rich than right." And I said, "Wow, Alan. Yeah, I sort of feel what you're saying there."
It's the one thing you agree with.
The context of that is that we were in a room. There's a lot of people having a very heated debate about what to do, what direction to take the business in, what was the right advice, what was the right capital structure, what was the right debt structure. And people were very passionate and adamant about their positions. And he pulled me aside. He said, whatever, I'd rather be rich than right. So while people were arguing over, I'm right, no, I'm right, no, I'm right, he's like, whatever, we got a business here, let's make the decision that yields the most money. And I never forgot it. And so it just goes to show you, even toxic, bad relationships and toxic, bad people that you might come across in your life, you can even learn things from them. And I'll never forget that. I never had business with this guy after that. And it was a very, very short period of time where I was considering having some business relationship with him. We never did anything formally. But in that time, we were really enmeshed together. And I hated him. He was just a bad guy. But he said that one thing to me, and it stuck with me. And it was, leave your ego at the door, Don't worry about people thinking you're right, and don't worry about if you look like you're the boss or if you look like you're the CEO, if people think that you're some genius. Like, who cares about all that? It's childish. Just like you're in business, make a business decision, maximize your value, your profits, whatever, and move on. And that's what he's saying. I'd rather be rich than right. And I never forgot it, and I deploy that to this day. And it was such a lesson in a lot of ways.
And it's also a skill to be able to glean that from situations where you feel like, this is fucking terrible, I hate this, and all these kinds of things. Even those things can be learning experiences, maybe especially those
things can be learning experiences.
Yeah,
that's right.
Yeah. No.
You don't learn from your successes, you learn from your failures.
Yeah, that's
right?
true. Yeah, 100%. Yeah. All right, well, this is a return of the Zest Quest. I've missed it, and I've decided this is, I wanted something.
First one of the new year. Let me have it. I'm excited.
What's a situation where you really get what you pay for?
Everything. Everything.
Yeah.
I grew up, my dad and I would talk about this a lot. I mean, I remember it from when I was a kid. You get what you pay for. If you buy right once, you never have to buy again. That's another thing he would say to me. So I never really was focused throughout my journey as a consumer, from being a kid to the adult that I am now. I was never really concerned with nickel and diming the various choices I had in front of me at any given moment, because I wanted the best value, the best quality, and I knew that sometimes you had to seek value in paying more. Like, you got greater quality, and that was your value proposition. It was just better. It cost more, but it was better. I was never really one to skimp or to pay the lower price. If I got 5 bids, I never went with the cheapest. If I went to the shoe store and I got a nice pair of shoes, I took care of them. I didn't trash them. They lasted a long time. I got the value I needed out of them, that kind of thing. I didn't just buy cheap and expensive sneakers when I was seeking a comfort solution. If I was seeking a cheap solution, I would buy cheap and expensive sneakers. But if I was needing a performance solution or a comfort solution or a color or a style, I went for that and paid up for the quality that got me that solution. I didn't just go cheap all the time. And I did that with real estate, and I did that. Look, I will always pay more for the right location. I will always pay more for the right opportunity. I will never be shy about that. I'm not always looking for cheap. And people say to me, "Oh, Peter, how do you justify paying those prices for that building?" I said, "Look, let the guy make some money. He's got a great asset. I want it. I want to buy it." "Well, Peter, you could go through and tell him that this is wrong with it and that's wrong with it." I've said, "Listen, I've been doing this enough. I already know what's wrong with it. In 5 seconds, after seeing the inside and outside of a building, I know what's wrong with it and what I'm going to have to do to it. I don't need to nickel and dime the guy. If it's a massive thing, if there's a crack in the foundation, if there's an environmental deficiency, that's a discussion I have to have with my seller. But if paint's peeling off a wall, or if the roof needs to be redone," this was a classic one. My dad would always say, "Peter, does the roof need to be done?" I'd say, "Yeah, it does." He'd say, "Well, are you going to go negotiate that with the?" "No, I'm not, because I want the deal. I got to close on this deal. I want the building. I want the location. I want the ability to put tenants in these apartments. I don't care if I have to put a new roof on. I'm going to do that anyway. It's in my budget. And I want to put a new roof on. I want to get a 30-year warranty on it. I want to set it and forget it. I'm never going to have a problem with this roof. And if I do, I'm making one phone call. My guy comes over and he fixes it. No questions asked, no invoice, no cost to me. I paid for it once already with a warranty. I got a new roof on there. My lender's going to love it. My insurance company's going to love it. It's going to look nice on the building. I mean, there's no would I love to have the seller say, oh, Peter, the roof needs to be done. I guess I'll knock off 15 grand for you. But they're not going to do that, and I'm not going to nickel and dime them because I know that I want this building. I'm going to make it worth a lot more, even with spending the money for a new roof. So I think you get what you pay for is relevant in everything in life. Oddly enough, I think the one place where there's still some value to be had is in food service and restaurants. Street food, I love it. It's cheap, it's good, it's like this really great visceral experience. I love paying a few bucks for like a great taco or like whatever. But look, I also love a great curated chef-prepared meal at some nice restaurant. You get what you pay for. It's relevant all the time. You're in the markets for things all the time, every day of your life, whether you're buying lunch for your lunch break, whether you're buying a bottle of water, whether you're buying clothes, whether you're buying housing, whether you're buying anything, school supplies, you get what you pay for. If you spend a little bit more, hopefully you get a little bit more. And as a consumer, hopefully you're trained to see that, right? I think we all have some amount of training to know when we're getting ripped off and when something's a piece of crap or not. But hopefully you have the options in your daily life to make those choices to get what you pay for and choose quality. I've always chosen quality over price. I'm much more interested in having something that's well made, that is of high quality, that perhaps is made sustainably, that perhaps is made without child labor, or that, like these are the things that are part of our discussion today as consumers. But, I am a fan of quality. I am seeking value and quality, not just quality for the sake of quality, but quality in its relationship to value. So
experience, yeah.
If I can have a great experience as a consumer, if I can get a great product that's going to last 10 years more than some other product. George, windows, when I put on replacement windows in a building, you get what you pay for. You can get vinyl replacement windows all day, every day. They're like $120 a window, but you're going to have to replace them again in 3 years because they suck, they don't work, they have no R value, the elements come in, they break, like there's no, but if you buy like the next model or two up from that and you spend $300 a window, now you have a window that's going to last you 10 or 15 years, maybe 20 years if you take care of it and service it. Yeah, I mean, it's going to work better for you. You're going to lose less on utilities and heating. And so you have to factor all those things in. As consumers, we're way more educated now than we ever were. As a society, we have access to way more information about products and services than we ever had access to. So make sure you're an educated purchaser of whatever it is you're buying. You get what you pay for, always. I always go for quality, but I'm looking for value to quality. I'm not just looking for quality at a high price. It exists everywhere. Value exists everywhere, even at the low prices, even at the high prices. Find your value.
Man, this has been a great conversation at the table. This is reminding me, you told me before we started filming that you were feeling a little tired. This is reminding me of the Michael Jordan game back in, I don't know what it was, 98 or something, with the Jazz, I think it was, when he was food poisoned. And he was
he still was hitting the shots.
And he was still hitting the shots. That's what I'm feeling.
Am I hitting
today.
shots, George?
I feel like, there's high energy. This feels great.
Energy.
So
thanks, George.
Anything else you want to talk about before we move to Q&A? Otherwise, I'm pretty set.
Let's go to Q&A.
Awesome. Thanks so much.
Thanks.
All right, Peter, we got another Q&A, beautiful Q&A. This one's from Tom Furler, and I kind of like
I love when you give me their full names.
Yeah, and I just want you to be
Tom
fully
Furler.
informed. Yeah.
All right, Mr. Furler, what do you got?
Yeah, so Furler, he's kind of informal. He goes, dude, you pump me up, man. Super inspired by your positivity. How do you manage to keep it positive when the times get tough? What's your self-talk? What music do you listen to? Do you have a specific workout? Where does the magic come from?
Where does the magic come from? The magic comes from, I'm not going to fail. I don't want to fail. I'm terrified of failing. That right there is driving me to have a positive mindset and the drive to succeed every day. I'm just generally a happy guy. I don't have a lot of things pissing me off in the long term. In the short term, in my day-to-day, everything pisses me off, right? But in the long term, in the marathon of the years over my life, the decades, I'm generally a happy guy. I think that's probably an advantage for me. You got to get your mind right. You got to think right. You got to take action. You have to have the confidence. You have to build up those wins. You have to build up the confidence from a string of wins and get out there and get it done. There's nothing that makes me feel better than getting off my ass and getting wins in the course of my day. Tom, if you're not doing that, you got to get off your ass and go try it. But I promise you, you're going to get that dopamine hit. You're going to feel good about yourself. You're going to feel good about what you're doing. You know, I don't know what you got going on in your life, man, but if it's a bunch of negative stuff, get rid of it. If it's negative people, get rid of them. If it's negative business or job or whatever it is you're spending your days on, get rid of it. Get into something that makes you happy, become an expert in it, become great at it, become so good at it that people are going to pay you to solve their problems in that space. Music, you know, I got Bruce Springsteen playing all day long, and I love my family. I'm around them as much as possible, my friends, my team at work. Great people. Tom, great people are so important. If you're around 5 negative people, you're going to be the 6th. If you're going to be around 5 complaining people, you're going to be the 6th. If you're going to be around 5 unsuccessful people, guess what, Tom? You're the 6th. You got to get around great people. You got to be the dumbest one in the room. You got to be the poorest one in the room. You got to be the least successful one in the room. Because when you surround yourself with people who are greater than you, better than you, bigger than you, stronger than you, wealthier than you, more successful than you, you're going to become the 6th.
Yeah, amazing. Yeah, be ruthless about optimism.
Thanks, Tom.
Yeah, cool. All right, well, thanks so much, Peter, and I'll see you next time.